Hi, how's it going? I'm Andrew with Investors Hub, and this is the market recap for the week of March 1st. So the flavor of this week has been bond yields and pain. So much pain. At least for me and a couple of my coworkers, we've been throwing our money at growth stocks and the high-flying stuff, and those stocks have been hurting extremely badly this week. I've been strategically not looking at my investment portfolio. Treasury bonds are buying government debt, basically. They're the safest investment that you can make on the market because if the federal government defaults on their debt, then we're in real bad shape. And you get an annual percentage yield, basically, off of those bonds. And as that yield increases, then they become more and more tempting to buy. And if you're going to buy bonds, then you're not buying other things. And institutional investors that run these big investment firms promise a certain percentage yield to the people that invest with them. And if they can make that percentage yield while making safer bets, then they're going to do it. And in order to buy more bonds, they have to sell in other places that are more risky. And the riskiest stuff likely goes first. So Jerome Powell, the Federal Reserve Chairman, said on Thursday that there's going to be some inflation on the way, but it may feel like more inflation because inflation was so low due to the pandemic. The bonds market didn't like that answer, so they started selling, which actually drives percent yields up. Because why buy bonds from the government when you could get a better deal by buying from your peers? Bondholders don't like inflation because that makes their real annual return lower. There are other reasons that high-flying stocks are not doing super well. I mean, people are thinking that, value stocks and blue chip type stuff are going to do better as the economy reopens. So like everything on the market, there's a million different factors that are applying to what's going on right now. So as a fun fact, hashtag stock market crash was trending on Thursday, but most of the articles that I've read disagree with that. Rocket Companies, aka Rocket Mortgage, RKT, their chart formed a rocket shape as it rocketed off into space, then came crashing back down again. It's a meme stock that was being targeted for its short percentage, going from roughly $25 a share up to $50 and then back down to $25 this week. So an interesting bit of news. Early this week, the equity strategy team at Goldman Sachs announced the SPAC market is getting seriously huge. They estimate that $103 billion worth of SPACs are sniffing around in the market right now to find private companies to make public, and that they would drag $700 billion worth of company onto the public market. And speaking of SPACs, a couple of dates got moved around since Monday's SPAC calendar video. GIX moved its survival/extension vote up to March 10th, which is the day that they expire. CIIC also announced recently that their merger vote with Arrival is on the 19th. Thanks for watching. Be sure to like, comment, and subscribe if you liked the video. And during the week, we talk to market commentators about the things that are going on in the market. So if that sounds good to you, I'll see you again soon.